Hey everyone, thank you for tuning in to Welcome Home Arizona. My name is Lindsay Berry from VIP Mortgage.
I'm Monda Clemens with the Darwin Wall team.
And I'm Tiffany Ledoux with the Darwin Wall team. And today we wanted to talk about once you've got an accepted offer and you're starting your loan process, one big question we have is, how do I know when to lock my rate? So Lindsay's going to tell us a little bit about how that works in terms of locking your rate.
Okay, and what does locking your rate mean? I bet a lot of buyers don't even know what that means.
Yeah, that's true. That's a really good point.
Because we'll say that. Basically, once we get the purchase contract in, we're going to give you an estimated rate of where the market's at for that day and what our company can provide for you. Obviously, we're going to get the most competitive rate that we can, but locking it means we're basically putting it in place. So that will be your rate for your loan. If we don't lock it, it's basically floating. So it's kind of based on the market. Our job as an LO is we watch the market. We kind of see what's going on, you know, what the recommendations are the next week or so. We'll get those notifications based on what's going on. Then we will decide, we'll discuss with you, hey, we'll give a recommendation. This is where we think, you know, it's a good day to lock, or maybe let's wait a couple days. And then once we lock that rate, that's the rate that you have in place for your loan. So that's what that means. Granted, you don't have to take care of that. We will for you. Again, we're going to overly communicate where the market's at and what our recommendations are based on your loan program, your credit score. Those are a lot of factors. So know that rate isn't just based on what you want.
I know.
It's
Can we
going
talk
to be
about
based
that
on
a
your
little bit?
file.
Because
Yeah.
I'm going to Quicken Loans, or sorry, I shouldn't say that. So I'm going to an online website,
Yes.
and I say, Lindsay, I have a quote for 3%.
Which we get a lot.
Right.
Yeah. What I'm going to recommend is you go online. You come to me, say, Lindsay, I found a 2.5 interest rate. I'm exaggerating a little bit. What I'm going to tell you, or what I'm going to advise, is go to the very bottom or go to the fine print. You're going to a lot of times see then the specifications of what you have to do to get that rate. A lot of times it could be discount points. What are discount points?
What are points?
Discount points, we are charging you money to buy down that rate. So you are paying extra money to get that lower rate. A lot of people don't know that. A lot of times in those terms as well, you have to put 20% down. Maybe you're not planning on putting 20% down. Maybe you want to do a 3% conventional loan or a 5%, or you're going FHA and only want to put 3.5% down. So make sure that you're not just looking at the big bright letters or the big bright numbers that are giving you this rate. Know exactly what that means, and then allow us to educate you and explain it so you know exactly what's going on with your loan. I highly recommend that. Don't go online shopping. I know a lot of people do that, but let us help you with that.
So some major things that can affect someone's interest rate, like Lindsay said, is your credit score.
Credit score is huge. Credit score is huge.
What if someone doesn't have the credit score that they want in order to get a great interest rate? Can you help them with tips on how to?
We're not credit experts, but I will tell you we are allowed to pull credit. That's what we do. It's part of the process, income, assets, credit. But we can look at that, run a credit simulation, give recommendations of what we're seeing that can potentially help raise that up. Granted, we're not credit experts, but we can also get you to credit repair if it's, you know, if we need a little extra help. So know that, again, your rate isn't just based on what you want. It's going to be based on your personal individual file, what loan program you're with, and credit is huge.
There's a lot of factors.
Yeah. A lot of factors.
And if you need credit repair, we got a guy.
We got a guy.
We got a guy.
They got a guy.
Absolutely. Okay, so if you have questions on your interest rate and the loan process, comment below.
Yes.
And then also our question of the week. Okay, I gotta ask. When you get dressed in the morning,
This is good.
do you put on your sock and then a shoe and then a sock and then a shoe? Or are you sock, sock, shoe, shoe? So, Lindsay, are you sock, shoe, or sock, sock, shoe, shoe?
I am so sock, sock, shoe, shoe. Like,
I am
totally.
too. You
I
have to
couldn't
go
do
sock,
a sock
sock,
and
shoe,
then a
shoe.
shoe.
And then a sock and then a shoe.
But I feel like when I dress my kids, I do a sock and then a shoe and then a sock and a shoe. But for me, it's sock, sock, shoe, shoe.
What about you, Monda?
Sock, sock, shoe, shoe.
I'm totally sock,
So
sock,
are we
shoe,
the
shoe.
same?
We all are the same.
Are you sock, sock, shoe, shoe, or sock, shoe, sock, shoe? Can you say that 6 times fast? I dare you.
And now that we say that, you're going to think about it when you get dressed. Am I
Every time.
sock, sock, shoe, shoe?
So comment below which
on
one
what you are.
Let us know.
We're
Thanks,
dying
guys.
to know. We're dying to know.
Thank you.
All right, bye. See you next week.